The market's in correction mode, Bitcoin is retracing, and Trump suddenly doesn't care about stocks? What's going on? Today, we break it all down, plus a look at the biggest stock moves and earnings of the week. Let's get into it.
Don't do it! Go!
You're watching Stonkcast.
Welcome back to Stonkcast, the average or the market show for the average Joe. Whether you're a diamond-handed degenerate hunting for the next moonshot or a patient investor stacking those steady gains, today we've got a packed episode. The market is in correction mode. Bitcoin is pulling back. Trump's got a new stance on stocks. Plus, we'll break down the latest S&P reshuffle, earnings to watch for, CPI reports, and we're going to go over our paper trading account. Stick around. Might just help you make some money along the way. As a reminder, if you are not subscribed, go ahead and subscribe. Go ahead and like the video. Comment down below what you'd like to see in any future videos or what you liked about our video. So here we are. It is Sunday, March the 9th. Let's just hop into it. We're going to rock and roll, give you a jam-packed episode today. So, Brandon, start us off, buddy.
Awesome. All right. Good evening, everyone. Hope you're having a great Sunday. Let's hop right into it. So the markets this past week continued their, basically, the massive sell-off. It's still continuing. Let's take a look at what we have here. Taking a look at the year chart for SPY. As you can tell, we are flirting with that 200-day moving average right now. So we got a nice bounce on Friday, which was really much needed after, the selling we've been seeing over the past couple of weeks. But we are flirting with that line. Let's take a look at the Dow Jones. Still above the 200-day moving average. I would say part of the reason for that is some of those lower beta stocks that are going to be in there. Some of the companies that are more established, right? You got the Qs, right? The NASDAQ, the tech-heavy NASDAQ. And this is officially below the 200-day moving average and really just confirms that, basically over the past month, the NASDAQ has been in a correction. And then small caps, I mean, we've touched on it before, Ethan. Small caps are just getting beat up right now. So overall, the market is not looking fantastic. We've been talking about it for a few weeks now, been seeing a ton of selling pressure, and really the chart is just confirming what we've seen. If I had to speculate, I would say that part of the reason why SPY is kind of holding up out of those four ETFs better than the rest is because of some of the sectors that, are part of SPY, right? So the industrials, the oil, the energy, stuff like that, things that even in a bear market, people are still going to need. But nonetheless, it is not looking great. So overall, the markets are down. This week's going to be really important. We have a lot of data coming out this week, including CPI, which Ethan will get into later. The Fed's going to be watching that. And if we take a look at the futures over here on the left-hand side, so this is overnight right now, Ethan, unless I'm colorblind, looks like a lot of red. So, looks like right now the NASDAQ is currently down just over 0.5%, 0.62%. The S&P 500 is down 0.5%. Things are not looking hot. Volatility is still above 20. I think on Friday we closed at 23, which was nice because it was up at 26, so it came down a little bit. But overall, right now, markets are still looking quite red, and so this week is really going to be telling, Ethan. I want to see if SPY can hold above that 200-day moving average, or if it's going to continue down just like small caps, just like tech has been doing. Yeah,
I like it. I would request bring that the SPY chart back up. And this is just a tangential education piece. about if you look on the line, and if you're watching, you look on this chart and you're a viewer and you're wondering, what is that yellow line? Brandon, that's the 200-day moving average, right?
Correct. Yeah.
Okay. I'm not leading you into a trap. Um, and I thought, okay, so I really enjoyed the bull market. Watch out for the horns of the bull, where we go up, and the bear market, where we go rah, down. So I thought, what is another educational piece that I could introduce, and we could kind of learn along the way, right? Because that's the whole purpose, is we're trying to learn and educate. So the best way to use the 200-day moving average indicator is with a mnemonic. We love mnemonics. So the two options are stay or sway. So
I
if
like
it
it.
is above, then you stay, because that's a bullish signal. And stay is strength in trend for S. T is trend confirmation. A is accumulation zone for investors. And Y is you ride the wave. So you stay. So whenever we see using SPY as an example, it's about to drop below the 200-day moving average. So we are about to sway. So S, sway, sign of weakness. W, warning of potential downturn. A, avoid chasing longs. And Y, you might want to exit. So if you have a position in SPY, and it's about to cross below the 200-day moving average, then you might want to exit, and it's a sign of weakness. So um, when the
Yeah.
price tests, you may have heard Brandon say this a few times. It's a test. It's testing a certain break point, or price. Um, what that is saying is, or what he's saying is, he's saying that the market is testing for either a bounce off of a price point or an indicator, or a break. And a bounce is bullish, because you bounce back up, so you rise up. And then a break is bearish, so you're breaking underneath the barrier, which is the 200-day moving average. um, but I just thought that would be something fun. So stay above, and then sway below. Sway is the bearish signal.
I like it.
Stay is the bullish signal. So stay in your position, or be swayed if it's below it. So yeah, um, I
I
just
like
thought
it.
that that'd be a fun thing. Yeah.
Yeah, and Ethan, also coming back to technical analysis, right? It's so important. It works in the markets, and here's a bit of an example from this past week. So I just drew out for everyone who's watching on YouTube a very easy to see support level. Usually resistance becomes support, support becomes resistance, as we've said before. And if you look back here in July and also in August of last year, you have SPY coming up and hitting resistance here, and then eventually it broke above. And if you take a look here on Friday, we literally came down and touched this area before coming back up, and obviously closing above the 200-day. But this is a key level. And the reason I know it's a key level is because you can clearly see how price reacts in this area. So, if we break below this tomorrow, I expect more of a bloodbath, especially with the news coming out this week. But this is why I love technical analysis, because we can use it to make some uh, educated guesses, I guess you could say, right, on how the market is going to respond. So, but yeah, that's SPY right now, and yeah, overall market, again, the futures are red right now, so it doesn't look pretty for the open tomorrow. All right. So moving on. So next up, Trump's market stance, right? So President Trump, there's a big difference between Trump 1.0 and Trump 2.0. All right. So if we think about Trump during his first term in office, he was overly focused on the stock market, right? He was very focused on making sure that thing kept going up, right? Trump 2.0, however, is very, very different. And we found that out just this past week. Trump says, according to CNBC, he's not even looking at the stock market. Tariffs will make US, quote, very strong. So for anybody who cares about the stock market, that is not what you want to hear the president say, especially coming off his first term where he cares so much about it. So President Donald Trump said Thursday that his administration would not consider stock market reaction when hammering out the details of its tariff policy. When asked whether the decision to pause tariffs on many products from Canada and Mexico for 1 month was due to the stock market, Trump said the decision had nothing to do with the market. I'm not even looking at the market because long term, the United States will be very strong with what is happening here. This is very much about companies and countries that have ripped off this country, our beloved United States, and they're not going to be ripping us off anymore, he says. So, I think that has an impact on the market. So Trump made the remarks in the Oval Office on Thursday at an event for signing executive orders. Trump was later asked again about the market sell-off and blamed globalists, a term he had used to describe companies and countries earlier in the event. So, Ethan, we cannot count on Trump basically to, save the stock market, I guess is kind of the point here. This is a drastically different approach from his first term, if you recall, where I feel like every time he was at the podium, he was talking about the stock market. He's not even looking at it. So,
Yeah. And if you look at the S&P 500, that's gone down 3% since the inauguration. Tons of other indices have lost more than 3% in just the past week. So whether or not he's actually like not paying attention to the stock market, I mean, maybe he's not because he's like, well, shoot, I'm not going to pay attention to this because all these tariffs are throwing things off.
Well, he also can't be
I'm not,
reelected, right?
yeah.
So maybe
Which, I
that's
mean,
part of it.
he's got tariffs ultimately are trying to, when you break it down to like its atomic like principle that he's aiming for with tariffs is that he's wanting to use tariffs to drive domestic growth, which is laudable, but I feel like we're in such like a globally intertwined, uh, you know, uh, industrial society now that's a very lofty achievement. And I don't know if this is just some of the initial growing pains from trying to bring domestic industry back to the U.S., but um, I think we had issues whenever Bill Clinton and his administration started, which I mean, probably started to happen before then, but I know I paid attention whenever Clinton's administration started. I think it was NAFTA, I believe, is what he signed into existence, which caused a lot of companies to go overseas. And yeah, so I don't know. Maybe it's a pullback.
Yeah. And also on Thursday, Commerce Secretary Howard Lutnick said that Trump's focus was broader than the daily moves of the stock market, right? So he's viewing this from a broader standpoint. He's focused on, like you said, growth here at home, and he is very much willing to kind of take some short-term pain, if you will, in order to have that long-term growth that he's envisioning and that his administration is kind of setting out right through these various acts with tariffs and these trade wars and things that really put investors on edge because when you open up your 401k, right, all anyone cares about is that going up. And Trump made it very clear last week that look, we're not worried about that here in the short term. So I just thought that was interesting because it's way different from what we got from him in his first term. So, all right, moving on. We did have some announcements regarding the S&P 500 and some of, I guess you would call it, the reshuffling that is happening there. So periodically, the indices will remove certain components and add new components in. So the S&P 500, of course, tracks the 500 largest companies. There's certain requirements to be in that particular index, such as your market cap and other things, right? And so periodically, quarterly, the S&P and some of these other indexes will readjust, remove certain pieces, certain stocks, and add other companies in depending upon who's doing good, who's not, right? And why this is interesting, and I just kind of want to touch on how you could potentially build a trade plan around this, because this is happening March 24th. We're going to have these new stocks listed, which I'll get to in a moment, but the S&P 500 index is one of the most widely followed stock market indices in the world, with trillions of dollars managed based on its makeup. When companies are added or removed from the index, it forces buying and selling in those company shares by index funds that basically aim to track the performance of the S&P 500. So there are various companies out there, investment companies, hedge funds, things like that, that will look to mimic the makeup of the S&P 500, for example, or other indexes. And so when you get companies that get removed or you get companies that get added, it forces those companies to buy shares in those companies that are getting added so they can continue to track and mirror the index at large, right? So it can create a bit of a buying frenzy for those various companies. Ethan, if you remember, we saw this with Tesla. When Tesla was added to the S&P 500, it created some buying pressure there. So basically, these stocks are getting added. These stocks are getting removed. This will take place officially on March 24th. But just to highlight some of the notable names, DoorDash, Williams-Sonoma, and TKO stock are being added to the S&P 500. DoorDash is a company that most everyone knows, most everyone uses. So they've met the various requirements to get into the S&P 500. TKO Group is the owner of World Wrestling Entertainment, WWE. They're being added in, and then Williams-Sonoma is a home goods company. And then you also have Expand Energy, which is a natural gas producer. So part of the quarterly reshuffling for the S&P 500, these companies are being added in. Some of the companies are being removed. So you got Borg Warner, Teleflex, FMC. These are some of the names that are going to be removed. So DoorDash, we saw shares rise 7% in after hours trading to $190 on the news, while TKO was up 3% to $148, and then Williams-Sonoma rose 2% to $192. And then Expand Energy edged up 1.5% to $98. So as we approach March 24th, I would say these are some stocks that you want to have on your watch list. Generally, as we approach that date where they're going to be officially listed in the S&P 500, again, you're going to see, generally speaking, growth in those stock prices, because you have various large whales, large institutional buyers that are going to be a part of that, to, again, be able to track the indices. So definitely something to pay attention to as we approach that date, and maybe a little thereafter too. But Ethan, one thing I would say is that while generally speaking, adding companies to the S&P 500, you're going to see, some growth in the share price, might have some bullish action. We have to weigh that with the greater macro market picture that we currently have, as we just touched on, right? Which is a market that is selling off. So it's not a guarantee, right? But I would be paying attention to those. In particular, I'm going to have my eyes on DoorDash. I think out of all of those, that's the one I want to pay attention to the most. So, that's what we got for a little S&P 500 reshuffling. It's going to be happening Any thoughts on that before we move on, Ethan?
When I think of reshuffling, I think of Roaring Kitty's Kansas City reshuffle, or Kansas City shuffle rather. Uh, but I have no clue what it means. I just know that it's something that those in the super stunk world are looking for, is the Kansas City shuffle. But it's a pretty staggering amount of market capitalization. I mean, it's 16 trillion in assets. That's
It's a lot.
significant. Yes.
500 largest companies. So,
And that's why, as far as SPY is concerned, why is SPY something that people focus on, that they watch? And it's because it is such a massive um, uh, uh, instrument, financial instrument. I mean, there are some people who the only thing they trade is SPY. The only thing they look at is doing SPY puts or SPY calls. There are some people that just exist off of that and like scalping SPY movement. So it is not insignificant. And if that's something that you, I say, would be interested in, just figure out what assets are in SPY. And I think that by watching those companies that are in the S&P 500, you can kind of start to learn, why it's moving the way it is. Which, I mean, it's a very diverse. There's retail. I mean, just looking at this list here, I mean, there's DoorDash, which is retail. Expand Energy is energy. Williams Sonoma, another retail. TKO Group Holdings. You said that was like entertainment, right?
yep.
So it's a
Yep.
very, very diverse. Um, and if you just want one thing to pay attention to and one thing to watch, you don't feel like, you know, uh, niching down into one particular like company or something like that, or sector. Just trade SPY. That's all you got to do.
Yeah. Easier said than done, though, Ethan. Easier said than done. I've tried. I've tried to only trade SPY
Yeah.
before, and for me at least, it's so challenging. You can get whipsawed on that thing so easily. But I mean, if you're looking at like a greater time frame, like what I'm referring to is like trading 0 day to expiration options on like a 2 minute chart. That's really hard to do, right? But if you're looking to like swing calls or puts for a couple days, couple weeks, when you're able to zoom out on the chart, you're able to see, a bit more of the trends. I would agree in that form. All right. Moving on here. So let's talk a little earnings action. So we do have quite a bit of earnings coming up this week. Some of the more notable companies that will be reporting, we got Dick's Sporting Goods coming out before the bell on Tuesday. That's one that I'll be watching. We got Groupon Tuesday after the close. We got Tilly's. We got American Eagle Outfitters. So some of the retail companies that are going to be reporting this week, I think, are going to be really, really important to pay attention to as the market continues this kind of bearish momentum, to see how they did, right? How did they do in Q4? Are we starting to see signs that things are indeed slowing down? Inflation is impacting some of these companies. So those are some of the notable ones here this week. We've in weeks past had some of the Magnificent Seven reporting. We saw Walmart report earnings. We had Nvidia, and so we're getting to the point now where we're kind of wrapping up earnings season. But this is what we got this week. I'm also looking at Oracle after the close tomorrow, actually. So these are some companies to keep on your radar. Maybe just kind of flip through some of these charts. Trading earnings is a very, very volatile thing. So make sure that you're respecting your plan, your risk management. I've seen plenty of stocks that report good earnings and then they go down. They can have bad earnings and they go up. There's a lot of scenarios where things don't play out the way
Up
you think
always
they would. What'd you say?
GameStop always goes down.
Yeah. Yeah. So GameStop always goes down on earnings. It always breaks Ethan's heart. So, just be careful. But, from a macro standpoint, it's going to be interesting to see how some of these companies come in this week, what their earnings looks like, and basically, how it's going to impact the market is going to give us signs, right? But I see a lot of retail this week, Ethan, and, companies reporting earnings. So be curious to see what Q4 looks like for them. So, all right. Any thoughts on that before we move on?
Go out and buy some Ulta so that you can pump their
There you go.
earnings up.
There you go. Make your wife happy. Buy some Ulta. Okay, so moving on. We got some juicy news on a company here, Intuitive Machines, ticker symbol LUNR, Lunar. So this company it's a private company that is basically, they're trying to go to the moon, Ethan. We talk on Stonkcast all the time how we want to go to the moon. Metaphorically, this company does it literally. They unfortunately had a failed lunar trip last year around this time, and I actually traded that. They basically got on the moon and then they tipped over sideways. And so it was a bit underwhelming.
So
And
embarrassing.
unfortunately, so embarrassing. It's like, hey, we made it to the moon, everyone. Congratulations. But we're on our side. So we can't exactly do what we wanted to do. So they basically did it again, Ethan. They did it again. Shares of Intuitive Machines closed another 22% lower on Friday, following a 20% loss on Thursday, leaving the stock in the red for a third straight week after the company put an early end to its IM-2 lunar mission. The Athena lunar probe landed on Thursday on its side and more than 1,300 feet away from its intended landing site. By not landing in a correct position, the craft was prevented from opening the drill and various instruments that it needed to collect samples from the moon before its batteries were depleted. So they had no charger. You only get X amount of hours on the moon. You're kind of far away from Earth, and your batteries die out. You're kind of screwed there. So by Friday, the company called an early end to the mission after collecting limited data. Intuitive Machines Athena probe was launched aboard a SpaceX Falcon 9 rocket from NASA's Kennedy Space Center in Florida. And so, yeah, it did not go well for the company. I want to pull up, Ethan, the chart for this thing, because this company, if we just talk about the back end of 2024 from basically July to December, I mean, look, this company literally goes to the moon, but the stock price itself went to the moon as well. I mean, this thing was at $3 back in August, went as high as $24 into January. But as you can tell since then, I mean, this thing's taken a nosedive because obviously it's not doing what it was supposed to do. You can't have your equipment on its side on the moon. That's not a good look for the company. And obviously, this is the reaction to it. So it's currently below the 200-day moving average. But I just thought it's interesting because if we look at the 2-year chart on this thing, I mean, I was literally in this last February. We had the same story play out. It was like on Fox. It was on all the news channels. They were making history going to the moon. I made a little bit of money off it, but once the news came out last year that it did the exact same thing and it was on its side and the mission was, kind of failed, the stock price obviously took a hit. So I just thought this was an interesting story. It seems like getting on the moon and doing what you want on the moon is a bit harder than people realize. So Lunar has some work to do, Ethan.
Yeah. And I can see why. I just looked it up. They're still listed as a moderate buy. So despite the fact that in the past year they've had two major setbacks, they're still a moderate buy. And I was kind of wondering what was driving that. And it looks like part of it is the fact that they are in NASA's Commercial Lunar Payload Services program, or the CLIPS program. So they're a they're not under any type of contract, but they can receive task orders for specific missions. There's no obligation for contractors to take on every task or remain active in the program. Honestly, it kind of sounds like DoorDash to the moon. It's like NASA is just like, hey, could you do this particular contract? And the different companies that are within this agreement, I suppose, can just pick up the contract as needed. But um, what I've read so far is that they, despite the fact that they have had this setback, they are the most experienced and have the most ability to like pivot and actually meet the demand of some of the contracts that this program sends out. So it's
Yeah.
kind of interesting. I mean, it's trading at what right now? Was that $17?
Yeah, hold on. I'll get back to the chart, but I just wanted to show this photo. Look at this haunting photo that they got. It's pretty cool. You can see Earth way out here, but
Yeah.
it's on its side. Not a great look, but I just thought that was a cool photo. No, right now it's trading at $8.77. I mean, it did have a bullish Friday. It's extremely oversold, and I think that's part of the buying that we saw here. Could be shorts covering too, but for me, I'm going to keep it on my watch list because obviously it's been very volatile. It's been getting a lot of action, right? So, I want to see it get back above 10, which just so happens to also be above the 200-day moving average. So I'm not touching it until then. But if we can get back above 10, have a solid day where it closes above that, then, this might take another leg up somewhere, right in here, like 16. Here's something interesting too. I know that we haven't really covered a whole lot on Fibonacci's, right? But I wanted to show really quickly what that would look like on here. It's basically just a way to kind of get a gauge based off a low and a high point where you could potentially see some reversals, maybe some support, where we would be able to potentially get in if we are looking for basically the opportunity for it to go back up, right? So let me see real quick here if I can find it. If not, we'll just save this for another day.
It's okay.
But
While you look for that,
yeah, go ahead.
I'll read some of the comments from the funny business going on in chat.
Do it.
Apparently, Benefactor, Mr. Ben, is very, very convinced. Ben and Bailey are both flat earthers, and they're having a little bit of a party in the chat. And I mean, hey, I think the only thing flat about the two of you guys is your jokes. You know what I mean? Um,
Yeah, we do have a few friends who, they do believe. I was just talking to Ben earlier about that. Have we actually been to the moon? I don't really have a stance on it, but it does make for some interesting conversation. That's for sure. All right. Well,
I
you
think
know what?
Kubrick, was it Kubrick that filmed 2001: A Space Odyssey, and then Eyes Wide Shut. I think Eyes Wide Shut was his last film that maybe never was released before he passed. I don't know if he was killed or if he was just like passed from like natural causes. But if you're a conspiracy theorist, you might think that he was killed because he knew more than he should have.
It could very well be. All right. I found
You,
it. I found it.
you got the fib now.
I got the fib. All right. So we'll do a deep dive on this another time, but just know this, right? Fibonacci retracements are a way that you can get an idea of where support could potentially be for a company. Basically, what you do is you just take the low point to the high point using this tool, and these are different levels given in ratios, right? Where the stock could bounce, right? So anything below 61.8 is typically a lost cause. Usually you want to see a bounce right around 38 or 61. And it's kind of interesting if you look at this, because all I did was take the low to the high. But I mean, Ethan, just look at the chart and you can see where the price action actually respected some of these levels. So it's kind of crazy how accurate Fibonacci's can be. So if you look right here, came up to 38, got smacked down, little hesitation here, went above, a little hesitation there. Look at this reaction around the 50 level, huge psychological level, and then it broke down. So we'll do something on Fibonacci's at some point. It's something I've only recently been using. I don't have a lot of extensive work with them, but it's something I've been using to kind of trace out levels of late, and it's a very cool tool. That can help you kind of gain certain entry points. Basically, is how you should be using it. So, but yeah. So whether or not we went to the moon, I don't know. But what I can tell you is this stock is not doing well based off of the perception that they landed sideways on the moon. So that's what
Bailey would like to make it known that she was just joking.
I didn't even see what she said. What'd she say?
She wants to clear the air.
Wanted to clear the air. Well, this is what happens when I don't pay attention to the chat. Okay. There we go.
Yeah.
Bailey is a huge supporter. Shout out, Bailey.
Speaking of things going to the moon, Bitcoin might be going to the moon, or it might be coming to chill out with us here on Earth. We'll hop into the Bitcoin outlook. We set for a retracement before a bear summer. What could be going on? Bitcoin is definitely cooling off after a massive run up. And now the question is this just a healthy correction? Or are we heading into a brutal bear summer? If we look at Bitcoin, pulling up the chart here, it has had quite the bounce back from a high where we had a high of around 107, and it's it hit the low 80s, almost broke free of the 80,000 mark, but then bounced back a little bit. And some of that might be because of the announcements about Bitcoin being included in ETFs. But really, it wasn't reacting a lot to market news on Friday. If anything, on the 7th, it just kind of crab walked for a while. But when we look at the current price of Bitcoin and the market sentiment, it did have a pullback from recent highs, and the retracement has had a lot of people nervous. But this is just normal post rally behavior. The key is how deep the retracement goes. If it stays above key support levels, it's just a healthy breather. It's just a healthy breather. It's people taking profits. If it drops below major moving averages, however, that could be a warning sign of a longer downtrend. Now, if we look at some historical data, what happens after a major run up? Looking at some past cycles, Bitcoin will often see a retracement after explosive gains. In 2017, there was one. Bitcoin hit all-time highs. It pulled back significantly, but then it continued to run. And then in 2021, a similar retracement led to a much deeper bear market. But of course, we skyrocketed past some of those markers. So which path are we on? Let's look at some macroeconomic factors. Interest rates. If the Fed keeps rates high, risk assets like Bitcoin could struggle. And then regulation, the SEC, they have been cracking down on crypto. But if you've been watching and listening, you know that the SEC starting in this administration in general has a much more friendly stance, friendly to neutral stance on Bitcoin and cryptocurrencies in general. However, with Bitcoin ETFs kind of in the scene right now, driving institutional adoption that could cushion any downside. So keep an eye on some key support levels. If Bitcoin holds strong, we could see another leg up. But if the macro conditions tighten, like interest rates again, or if the SEC regulation comes back into a harsher light, we might be in for a rough summer. Personally, from what I've gathered from the interwebs, from Twitter or X and 4chan, the overall sentiment is bearish. The overall sentiment is that we're going to be coming into a bear summer. There is another YouTuber. I don't have his name right off, but I was watching him, and he was looking at some of the key indicators, and he thinks that there's going to be a bullish summer for Bitcoin, but a lot of people are thinking bear. I don't know. I think with all these institutional investors and this push from like Trump and whatnot in his administration, I could see it being bullish, but I'm not sure.
It's just interesting to me that on one front we have Trump, pushing for the reserve, right? The Bitcoin, the crypto reserve. But on the other hand, he's saying he doesn't care about the stock market. So
Yeah.
like I don't know how to reconcile those two things, but what? Pick a lane, exactly. Yeah, pick a lane. No, listen, I mean, I agree with you. I think that crypto overall, it just it looks bearish. Like there's no way around it. If the markets are going down there, I don't see a world where the market is in a correction, right? Where we're in a bear market in equities, where bonds are up, where yields are up, where precious metals, gold, silver are up, and crypto is also up. I don't see it. I think if the equity market is down, I think crypto is also going to be down. So
Yeah, I agree. I agree. We'll see. And that bumps us to our next segment, which is CPI report incoming. What is inflation's next move? That could be a major driver for Bitcoin as well and other cryptos. But the next CPI report drops this week, and all eyes are on inflation because
oh
what
baby.
happens could shape the Fed's next move and the market's ultimate direction. So, what are we expecting? Economists expect CPI, but the real question is, are we seeing a trend downwards or inflation getting sticky again? If inflation remains high, the Fed, they may delay rate cuts, which could hurt stocks. If CPI drops more than expected, markets would rally hard on hopes of an easier monetary policy. So, how inflation impacts the Fed's next moves. The Fed has been signaling rate cuts this year, but only if or later this year, but only if inflation cooperates. If inflation comes in hotter than expected, Powell may delay or reduce planned rate cuts. If it's cooled significantly, expect a market relief rally as investors price in a more dovish Fed. I was calling that dovish a few weeks ago, but it's dovish. Um, Market sentiment and investor strategy. So, stocks, crypto, and bonds, they're very sensitive to inflation data. So, expect some volatility around the report. That could be a play that you could maybe try to make happen is play around the volatility of crypto, of Bitcoin specifically, on the day that the report's supposed to release. If inflation is under control, growth stocks and crypto will benefit. If it's sticky, your more defensive stocks and commodities may be the safer bet to dump some cash into. So the closing takeaway is that this CPI print could determine the Fed's tone in the coming months. And it's pretty basic. A bad number, more pain for the markets. We're going to continue to have kind of bearish downtrends. And if it's a good number, risk on rallies incoming. So that's what we
Yeah.
got. We got CPI report. Keep your eyes open. What do you think?
Yeah, I was just going to add, I was reading this last week. Basically, a senior portfolio manager said the market still wants the Fed to come to the rescue. Until inflation and inflation expectations come down, however, the Fed is going to be handcuffed. And I just thought that was so brilliantly put, because obviously we now know that Trump is not going to be the savior for the market, at least in the short term, right? I believe in the long term plan there, not to get too political, but as far as the market, the equity markets look right now, right? Basically, we can't count on Trump to save us. He's not paying attention. He's focused on tariffs, trade war. That's great. So investors aren't looking to him. So they turn to the Fed, like, hey, come on, daddy pal, like, give us something here. And the problem is, until these prints start getting better, we're not gonna get anything there. Investors should be mindful of last month's hotter than expected CPI, where we saw inflation rise 0.5% in January. That is the biggest monthly gain since August 2023. That is huge. So that was just last month, right? So, yeah, I don't know. CPI this week is going to be on everyone's radar. I'm definitely going to be paying attention to it, and if that comes in hot, man, it's not going to look good. So,
Well, other things to look out for is whether or not DeepSeek continues to come under threat for the U.S. So the U.S. is likely to ban DeepSeek for government devices. So if you don't know, what is DeepSeek? Why does this matter for investors? If you have been under a rock, not to be too rude, Morgan's reminded me not to be too rude, but DeepSeek is an AI-powered search engine. I think search engine is probably not the right thing to call it, but it's an AI, a large language model. It's similar to ChatGPT, and it's designed for high-level data aggregation. The government fears that DeepSeek's connections to China could pose a security risk, just like there was a security risk with TikTok. So similar to that controversy, concerns over data privacy and national security were driving that decision. And really, it's not just about national security and data privacy. It is about who owns the data, because the data is out there. The U.S. just wants to have their citizens' data, not to allow other foreign entities to have it. So if the ban happens, it could set precedent for more AI-related restrictions. So that could affect companies like OpenAI, Google, and Microsoft. So investors should watch for tech regulation trends. That's something that Sam Altman was calling for, a year or two ago, is slowing the adoption of AI, and instituting some regulations. But interestingly enough, he was also saying, "Hey, we've got a problem. The line's about to get into the market square. Let me help with my counter lion." And so he was being pretty disingenuous. Um, he was, I think, at the time, Sam Altman was just trying to like drive up, interest around like OpenAI and stuff.
probably.
But if government cracks down on AI, cybersecurity firms could see some increased demands. So people like Palo Alto Networks or CrowdStrike might be worth watching. Uh, Closing takeaway: this isn't just about one AI tool, it's about the bigger trend of government scrutiny over AI. So expect some more tech regulation headlines in the coming months. Who are the winners? Maybe cybersecurity firms. I think cybersecurity is often put off to the side. It's just insurance that's not thought about until the problems happen. So we'll see with that. Losers, any AI companies tied to foreign data risks. So I think your more in-house AI companies, Microsoft with, I think it's Gemini, maybe that's Google. No, yeah, Microsoft is Copilot, Gemini is Google. They might be safe, but something like DeepSeek they're going to be the losers in this. So we'll see. I don't like the idea of tech regulations around AI because I think that that will take us into a downtrend of advancement. But I also know that it's probably inevitable. I mean, especially when we get some major like data breach that's purely AI driven, there's going to be some chaos around that. But yeah,
For sure.
what you think?
Yeah, I mean I don't track with the AI stuff as much as you do, but DeepSeek not being allowed, in the government, I think that was something a lot of people probably could have predicted was going to eventually come, especially as it relates to China US relations and the trade war and just the security issues. I mean, we've already seen, right, some of the security concerns with TikTok, right? And so, kind of in that same lane, I'm not too surprised to hear that. So I don't know. We'll see what comes of it. I'm really curious to see the impact on, just some of the efforts AI related stateside and how this will be impacted, I guess, long term. But yeah, we'll see what happens. I think I read that it wasn't a for sure thing that they were going to ban DeepSeek, but it was like highly probable. So it is not officially banned yet, keyword yet, but I wouldn't be surprised if that comes out very soon. So
Yeah. Well, we'll use that to transition to our paper trading account and what we did this week, the update that we've got. So, as a reminder, on February 24th, we bought 10 contracts for NVIDIA for puts at the $130 price mark. And all this week, NVIDIA kind of fell and fell and fell and fell. It touched $107 and it tried to regain some more momentum around the $113 mark. So I had a few close calls. On the 5th, I sold 3 contracts because I just wanted to try to start to exit the position and start to get a little bit of profit out of it. And if we look at what we started with, so we bought, and the total amount was 5,400, and then we sold on the 5th 3 shares or 3 contracts rather, and then I sold 3 more on the 7th. And so my position right now is that we've got, let me see here. I'm a silly boy.
And
We've got,
I also think, Ethan, our Celsius position looks like it's turning back around. So just want to throw that out there. That was looking pretty red for a long time.
yeah. And VIX, we sold a couple contracts. I think we sold half, right?
Yeah, we
And
talked about
then
that last week. Was that on Thursday? Did we sell that on Thursday or Friday? Do you remember?
let me look here. We sold it on the 7th, whatever that was. Was that Friday? Yeah,
The
it was Friday.
7th. Okay. Yeah. So yeah, we took off basically half our position on Friday for profit, keyword for profit on VIX. So that's great. And we're still running. We basically have runners at this point, which I think is a good move heading into CPI this week. So
Yeah. So we profited 4,000 on VIX, and then total profit after you take out what we spent on the NVIDIA puts is $8,125. So we're up
very nice.
up 8 bands on NVIDIA, looking good.
I like it. I don't really have anything to add to the portfolio right now. Maybe we'll do something on Thursday. I just want to ride with VIX right now and Celsius and yeah, see what happens. But NVIDIA, good call on your part. We've been able to get some nice returns on that.
Yeah. And just to reiterate what was driving the call for puts versus calls on NVIDIA. Number one, they had just been so bearish for so long, and that momentum couldn't keep up. But also, it was centered around earnings, and then it was centered around market sentiment. I was reading about at a NVIDIA conference, or it was a conference for the Consumer Electronics Show, I believe, and NVIDIA had a speaker that was talking about their new GPU and how it would drive, AI to essentially replace these jobs. And the jobs that they mentioned in the report wasn't IT jobs. It was like factory workers and things like that. And of course, the Consumer Electronics Show is not populated by blue collar folk. It's populated by like IT people and computer dudes and things like that. And like when you think about where are the market cuts happening for jobs when it comes to AI, it is not the janitor. It is not the welder. It is the IT dudes. It's the developers. That's where the cuts are coming from. And so there was like zero applause or anything with the NVIDIA speaker. And so that's part of the sentiment that was driving the put, is that I think eventually, NVIDIA is going to sell itself into a hole because the people that are going to buy the GPUs are the people that are going to end up losing their jobs in the long run if AI really does take it over. But anyways, that's a podcast and a show for another average Joe.
Yeah. Yeah, still looking bearish. Still looking bearish on NVIDIA. So obviously below the 200-day, below the support line I have here. So yeah, especially if we get that hot CPI report. Doesn't look great, Ethan. Doesn't look great. It's never a good situation where you have one stock that feels like it's propping up the whole market, because that's how I feel about NVIDIA over the past like 6 to 8 months. Like the whole market's just been banking on NVIDIA to deliver good results to keep the market going. And I think that is starting to fall apart. So
Yeah. Well, that's all I got for you. Got anything else?
that's it. We'll be back midweek, right before CPI prints. And thanks again for supporting the show. Please like and subscribe. Yeah, that's all I got, Ethan.
Yeah. So that's a wrap for this episode of Stonkcast. The market's in correction mode. Bitcoin's pulling back, and the Fed's got some big decisions ahead. So stay sharp out there. If you got value from today's episode, make sure to hit that like button, subscribe, drop a comment below with your market predictions. Are you buying the dip? Are you waiting for more pain? Let us know. Until next time, plan the trade and trade the plan. Thank you for joining us.